Welcome back to the Junius Maltby channel. To those of you who have survived the recent glaciate period and coming ice age. Let's talk about that for a moment in the news. Apparently these low temperatures that struck ended up costing the United States $5 billion. It put a $5 billion chill on the economy. This, if you're familiar with the term, the polar vortex, they're calling it. Apparently all the global warming has led to a sudden decrease in ambient temperatures, leading to this giant polar vortex. And because of global warming causing global cooling, they call it, I don't know what the scientific process is because I'm not really a meteorologist, I'm not even an environmentalist, but so apparently there's this Orwellian scientific formula that makes it to where and explains how warming equals cooling. I'm just not smart enough to understand it. That's not the point. The point is this deep freeze put $5 billion chill on the economy. We're probably not ready for that. Not only is it costing money in people heating their homes, it's putting a tremendous strain on the energy sector, just being able to meet the demand in electricity and natural gas, heating oils, etc., things like that. So we'll see how that plays out. As we all know, economics is a funny little science, if you even can call it that. But just a couple hiccups like this, you know, $5 billion, boom, with a change in weather, can ripple through the economy later in the year, and even as far as out later in the decade, perhaps. Who knows? You know, we don't know how this will affect everything in the long run. All right. Aside from that, let's talk about some gold news, because that's what everyone likes, right? We all love gold. We're going to talk about the German gold repatriation. We've covered that a little bit this week, but I wanted to also cover the UK Mint and Chinese gold demand. So just I'm giving you a quick little intro here. So stand by. Next one we're going to talk about is the 23 reasons to be bullish on gold. Since we're there, let's just cover that first because it's kind of interesting. Excuse me. All right. Well, apparently, Laurinus Vegas, if I'm pronouncing his name properly, is a research analyst and wrote an article that came out yesterday on 23 reasons to be bullish on gold. You can look it up, but if you want to read the entire thing, or you can just let me give you a quick synopsis here. Instead of reading every single quote and entry, I'm going to try to read maybe the most interesting ones. So you're all familiar with some of these names, but I'll name them real quick. So Mark Faber, bullish on gold. Brent Johnson, CEO of Santiago Capital, bullish on gold. He thinks gold's going to $5,000 an ounce over a number of years. We'll see. We'll see about that. That'd be great. Would it be great, though? That's the question. Who knows what a world in $5,000 gold looks like, so could be pretty bad. Jim Rogers, of course, bullish. Here's an interesting name. George Soros seems to be getting back into the gold miners. He recently acquired a substantial stake in the large cap market Vectors Gold Miners ETF GDX, and he kept his calls on Barrick Gold ABX. So that's an interesting one there. Don Cox, Jeffrey Gundlach, Steve Forbes, Rob McEwen, CEO of McEwen Mining and founder of Gold Corp, reiterated his bullish calls for gold to someday top 5,000. So we'll see what happens. I think he's got some good points too. Doug Casey. All right, now let's go to some countries. What are the countries of the world doing? Central banks, right? We always like to talk about them. Turkey, they added 13 tons, or 417,959 troy ounces of gold in November of 2013. So while you guys were eating your Thanksgiving dinner, Turkey was buying over 400,000 ounces of gold. Overall, it added 143.6 tons. That's 4,616,847 troy ounces so far this year. That's up 22.5% from a year ago, in part thanks to the adoption of a new policy to accept gold in its reserve requirements from commercial banks. That's the nation of Turkey. Okay? So they might know something. They might know a thing or two. Again, you're looking at the epicenter of what was once the Byzantine Empire, the Ottoman Empire. These people have been around for a couple of years. They've seen empires rise and fall. They've probably been through a couple economies and different sea changes in the history of the world. So you might want to pay attention to that. Russia bought 19.1 tons, that's 614,079 troy ounces, in July and August alone, with the year-to-date addition of 57.37 tons, their second only to Turkey. Russia's gold reserves now total 1,015 tons. It now holds the 8th largest national stash in the world. That's Russia. South Korea added a whopping 20 tons, 643,014 troy ounces of gold in February of last year, and now carries 23.7% more gold on its balance sheet than at the end of the year in 2012. Here's a quotation: "Gold is a real safe asset that can help us respond to tail risks from global financial situations effectively and boosts the reliability of our foreign reserves holdings," said central bank officials. Kazakhstan. Now, this blew me away because when I think of Kazakhstan, and I'm not being racist, I think it's a beautiful region. I love the stands. All those countries over there are just absolutely gorgeous. The mountains, the people, the culture, the tea, the sheep and the goats. It's a great place. But I just don't see them as being people that have a lot of money to be able to buy gold, right? You'd think, and this is probably my ignorant Western, because I'm not educated in the region enough, you would think that these people would not be able to buy gold. But Kazakhstan has been buying gold every month at an average of 2.4 tons through October. That's 77,161 ounces. As a result, the country's reserves have seen a 21% increase to 139.5 tons from a year ago. Go Kazakhstan. They're, who knows, one of these days they might be one of the G20 with decisions like that. Azerbaijan has taken advantage of a slump in gold prices and has gone from having virtually no gold to 16 tons, 514,411 ounces. That's a little country that knows a thing or two. Sri Lanka and the Ukraine added 5.5 tons and 6.22 tons, respectively, over the last year. China, of course, is the 800-pound gorilla, and the mainstream analysts just keep ignoring them. Nothing official has been announced by the Chinese central banks, but there's pretty good data to suggest that they've probably purchased over 1,000 metric tons. China ended 2013 as the largest consumer of gold in the world. It's very interesting because there's a quotation from Liu Zhongbo of the Agricultural Bank of China, and it goes like this: "Because gold has capabilities to absorb external economic shocks, growth of its use in the international monetary system will be imminent." So let those words sink in. Here's a guy in China from the Agricultural Bank of China who's saying that the international monetary system, the growth of gold's use in the international markets is imminent. So they're buying, upwards of 1,000 tons a year. They're one of the fastest and largest growing economies in the world. So if they think gold is going to be valuable and that it should be used, we might want to pay attention to that. All right. And then there's the commercial banks. Goldman Sachs, when they were telling everyone to sell gold, they actually ended up buying a stunning 3.7 million shares of GLD. Venezuela decided to raise cash by pawning its gold, and who stepped in? Goldman Sachs. Then there's Societe Generale. They think gold's going to top staggering number here. They put a number out of $10,000 an ounce, with the S&P index tumbling to 450 and treasuries yielding less than 1%. It's quite the prediction, Societe Generale. I can't disagree with you, though, I guess. JP Morgan went on record in August commenting that clients' positions for a short-term bounce in gold. Excuse me. Scotia Mocado's Sunil Kishap said that despite the sell-off, there's still significant physical demand for gold, especially from India and China. Commerce Bank is calling for gold prices to enter a boom period this year based on investment demand from Asian countries, China and India in particular. We've covered them extensively here. The Bank of Merrill Lynch, they remain long-term bulls. And Citibank's top technical analyst, Tom Fitzpatrick, stated that gold could head to $3,500 an ounce. He says, "We believe we're back into that track where gold is the hard currency of choice, and we expect for this trend to accelerate going forward." All right. So, there you go, guys. That's 23 reasons quickly, try to cover them quickly anyway, to be bullish on gold, which I don't think very many of you need me to tell you to be bullish on gold, right? Now, on that could be a reason, or that could be 23 reasons why Germany wants their gold. There's a lot of information coming out. It's all over the place. You can look it up. You know, where is the German gold? That's the big question. It's kind of a, it's neat. It's almost like a Tom Clancy novel. You know, there's this big heist, a lot of mysteries, a lot of intrigue. As we know, almost a year ago, Germany put a formal request to reclaim or repatriate a portion of their gold. And we covered this a couple times in videos on this program where, you know, it's 300 and 340 tons. They got 340 tons in France. They got like 300 tons in the U.S. Well, in summary, it looks like this. The original German gold held in the U.S. is probably gone. It was probably leased, sold, or rehypothecated many times over. Germany now wants its gold back. The U.S. Is playing dumb, I guess you could say. And we agreed to return like 40 metric tons a year for 8 years. France didn't return any in 2013, and Germany's looking for 374 metric tons from them. So it's 374 tons from them. And in 2013, it got nothing. So, what would you do if someone was holding almost 400 tons of your gold and they just didn't want to give it back? That would be a reason to build tanks and to cross the Maginot Line. Pressed to come up with gold and to ship it back to Germany, the U.S. is having to look in the vaults for it. The U.S. has taken some of its, supposedly, now this is, again, I can't confirm some of these statements, but the U.S., it says, has taken some of its 1930s confiscated coin melt gold that was assayed at 90% purity and recast it into 99.5% purity London bars and shipped them off to Frankfurt. These bars have been restamped as 2013, and the Germans are viewing it basically as a return of some of the German gold, and now they're awaiting the other 95% of their order. Well, as we all know, there's not a lot of gold in the world to be scrabbled over, so GATA's got some information on this. I urge you to read it. If you want to go to the Gold Antitrust Action Committee, gata.org. You could look on there for more information relating to this issue. And the GATA article is titled, "Did the Bundesbank Get Even a Little of Its Original Gold Back?" Well, very good question. I think that this German thing might start becoming more of a story as time goes on. Hard to tell. They have a tendency, the powers that be, to sweep stuff like this under the carpet. So who knows who's getting whacked? Who knows who's getting paid off? Where the information's going? Here's another interesting story for you. Any of you that are British Commonwealth citizens or like to buy UK Royal Mint products, we're 1 week into 2014, and the UK Royal Mint supposedly has run out of gold coins already. We'll say that again. The UK Royal Mint says that it has run out of 2014 sovereign gold coins. They expect to have them in stock again by the end of January. But that should tell you that they are selling gold a little bit faster than they can produce it, and they might not have as much as people believe. So, a little bit of shortage there. Back to China, a little bit of news on China one more time. This is from Kitco News. Chinese gold demand strong at the start of 2014. Chinese gold buying has noticeably picked up at the start of this year, 2014. And we're only 9 days into the year, so keep that in mind here. It's been helped by softer prices and the approach of the Chinese New Year. The premium in China has risen to $20 an ounce, perhaps $10 higher than a week ago. That's an indication that demand is relatively healthy. And this is not just in China. The whole Asian world, remember. You've got Thailand, Hong Kong, Korea. They're all doing this. They're all buying gold. China's just the biggest one over there buying it. But the increased activity in China is consistent with typical seasonal patterns, according to the experts. And, so we're going to see a little uptick there in consumption in China. All right, well, that's just a little bit of the news for you on gold. Hope you guys are doing well. Remember, keep your ear to the ground, listening for the hoofbeats, and make sure you're paying attention to what's going on. I think there's a pretty strong possibility we're going to see these guys worth a little bit more at the end of this year than at the start of this year. So if you're looking for a solid investment right now, you might want to give consideration to the ancient and beautiful and weighty gold coins. And just to cover one quick point here, there was an individual who had a comment, and I appreciate you guys commenting, I really do. And I love the exchange information. That's what this is all about, right? We're trying to educate each other here, share ideas, talk about things. He brought up a point when I made a video on a half-ounce gold coin that we added to the stack. This is just, about a week ago. And he mentioned that the half-ounce eagle didn't contain a half-ounce of gold, and that I should reconsider purchasing eagles for that very reason, because they don't hold the full half-ounce, because they're not pure, they're 92%. And I tried to correct him a little bit on there as politely as I could, just by relaying some facts, because that is a myth, or I guess you'd say for people that don't understand exactly what the way the U.S. Eagles are minted and why the purity is what it is. It's true, they are 92% about gold, but they still contain exactly the amount of gold that is stated on the coin. So, for example, I hope you guys are tracking me and following me here. This is kind of we took a side street here, but just for educational purposes. So this says it holds 1 ounce of fine gold, right? Can you read that right there? 1 ounce fine gold on an eagle. Now, it holds 1 ounce of fine gold. There is a pure 1 ounce of gold in that coin. Now, that coin weighs more than a troy ounce, because they add additional metal to the eagle line of coins in order to harden the coin. So, for example, I believe it's silver and copper. So they put a little bit of silver and a little bit of copper in the pure gold to harden it, give it some strength and wear resistance for circulation purposes. We'll cover the reason for that in just a second. The gross weight of a 1 ounce eagle is 1.0909 troy ounces, or 33.930 grams. That extra 0.0909 is those added metals that are used to harden the coin. It's the same formula for all eagles. So a 1/4 ounce coin, a 1/4 ounce gold eagle, instead of weighing 0.25 troy ounces, it weighs 0.2727, 8.483 grams, because of the added silver and copper to harden the coin, and so on. So each coin of the eagle line doesn't weigh exactly. I'll just make a video on this after this video. Heck. Alright, hey guys, this is Junior Smallpy signing out. Appreciate you guys for being here. Take care, and welcome to the Junior Smallpy program if this is your first video. I hope you enjoyed it. Go back, explore some of the other ones, and join the conversation. All right, like, subscribe, share, communicate, talk, and leave comments. Have a great day, everybody.